Hello everyone, my name is Acc Presentation, and I'm here to discuss about the cash flow given in the questions and completing the first slide. On the introduction part, it tells about that the presentation will this presentation will present the cash flow statement based on the information in the assessment, and the presentation also focus on the complexity in recognition of intangible asset. Coming to the introduction part section. The recognition and the measurement of the intangible assets is very difficult as it requires various estimates and professional judgment, and such estimate may not be completely accurate. Recognition of the intangible assets is done as per the guidelines of AASB 138. This presentation will outline and analyze complexity in recognition of intangible asset. Recognition of intangible asset as per the accounting standard. An intangible asset, according to the ASSB 138 2007, has three essential qualities. It is an identifiable, non-monetary, and devoid of physical substances, and its separability or link with the contractual or the legal right determines its identity. According to the ASSB 138, which established the citation for the recognizing intangible asset, as asset may be recognized if two required are satisfied. First, it must be likely that the asset will provide the business future economic benefits. And second, it is possible to calculate the intangible asset cost with the accuracy. And the third point is, it is crucial to remember that the certain intangible assets which are generated internally are not subjected to recognition, as stated in ASSB 138, paragraph 63. Coming to the next slide, complexity in recognition of intangible. What are the complexities? Coming to the first point, there have been a number of challenges associated with the worldwide rollout of intangible asset reporting. Some of this difficulty includes expanding investors' interest in alternative reporting techniques, concern about the legal and the regulatory consequences of more disclosure for companies and auditors, and the expenses involved with the revealing such information for corporations. Measuring intangible assets may be difficult because of the need to predict their future economic value, which often necessitate using the expert judgment and guess. The company must comply with several intangible asset disclosure rules. Coming to the next slide, complexity in recognition of intangible. First, confusion in recognition of internally generated intangible asset. Internally generated intangibles, which are assets made inside the company, are hard to categorize and have been creating confusion in its recognition. These types of intangible assets are usually not included in financial records because there doesn't seem to be clear link between how much they cost and how much money they are expected to make in the future. Second number, subjectivity in the identification and evaluation of intangible asset. The identification and the appraisal of intangible assets may be difficult due to their subjective character. Intangible assets are more difficult to evaluate and value since they lack a distinct physical boundary. The uncertainty associated with the future usefulness of intangible assets make them difficult to value. Expert judgment is required to determine if something is an intangible asset with consideration given to issues like isolation management and the future economic returns. Here comes the next slide. There is no objective measurement criteria for intangible assets. The absence of agreed upon objective standard for measuring intangible assets adds another layer of complication. While standards like IFRS and ASSB give some direction, intangible assets assessment often involves sophisticated models, market data, and professional judgment. There might be a disparity in acknowledgement and assessment across the sectors if business use different techniques. Challenges for valuation for acquired intangible asset. The intangible asset purchased by a company might be difficult to identify and assess a value for. Allocating the purchase price to distinct intangible asset in the event of the company merger or acquisition may be difficult. Coming to the third point, estimating fair value requires identifying and distinguishing physical and immaterial component. Due to this, a loss of professional judgment and estimation are made by companies to recognize or measure the intangible assets. Fifth number, technological advancement and emerging intangible asset. New intangible assets and technique development creates new level of complexity for business to investigate. New kinds of intangible assets such as flow algorithms, digital platforms, and data analytics skills are fast developing as innovation and technology continue to reshape company landscape, and it might be difficult to ascertain the criteria for recognizing these innovative assets, their useful lifetime, and the most suitable assessment techniques. Coming to the sixth point, transparency and disclosures requirement. Intangible assets must be disclosed and accounted for openly and regularly when they are first recorded as assets. The necessity of using one best judgment in conveying the value and relevance of intangible is highlighted by the fact that it may be difficult for business to strike a balance between the requirement for openness and the privation of private information. And coming to the conclusion point, here we can conclude that intangible asset appraisal is a challenging task that requires the application of professional judgments. Intellectual property, trademarks, client relationship, and the software are all considered intangible assets by the International Financial Reporting Standard and the Australian Accounting Standard Board. This class of assets is defined as including all the forms of intangible property. And coming to the third point, due to their importance in the modern economy, these assets are vital wealth creators for business and they are actively participating in it. Recognizing the intangible assets by organization is a complex endeavor that requires professional judgment due to the subjective nature of their identification and the lack of objective measurement criteria, the valuation challenges for acquired asset, emerging intangible assets, and the disclosure requirement. Thus, there are many complexity in the recognition of intangible assets. These are the differences. Thank you so much.